How safe is AbbVie Inc.'s dividend? On July 26, 2019, AbbVie Inc. reported second quarter earnings results for the period ending June 30, 2019. This video provides an update on the company's dividend safety using its most recent operating results. Before we begin, I invite you to subscribe to our channel and like this video, which will help more people discover Sure Dividend's investor education efforts. With that out of the way, let's dig into AbbVie Inc.'s dividend. To begin, let's talk about AbbVie's business model. AbbVie is a global pharmaceutical giant that was spun off from Abbott Laboratories in 2013. The company's primary source of revenue is Humira, which is a multi-purpose drug. Humira is the best-selling drug in the world. AbbVie has a market capitalization of $95 billion, with annual revenues nearing $33 billion. AbbVie is one of the world's most popular dividend growth stocks. The company's current dividend yield is 6.6%. Moreover, AbbVie is a consistent dividend grower. Including the years that AbbVie was part of Abbott Laboratories, the company has increased its annual dividend payment for 47 consecutive years. AbbVie has increased its dividend every year since the spinoff was completed. Looking ahead, investors interested in owning AbbVie stock will likely be interested in the safety of the company's dividend payment. For the remainder of this video, we will discuss AbbVie's dividend safety from four perspectives: its dividend safety in the context of its current earnings, its dividend safety in the context of its current free cash flow, its dividend safety in the context of its recession performance, and its dividend safety in the context of its current debt load. AbbVie's dividend safety relative to earnings. First, let's discuss AbbVie's dividend safety in the context of the company's current earnings. In the second quarter of fiscal 2019, AbbVie generated adjusted earnings per share of $2.26, which compared quite favorably to the $2 of adjusted earnings per share in the same period a year ago. For context, AbbVie currently pays a quarterly dividend of $1.07 per share, which implies a payout ratio of 54% in the most recent quarter. Looking out over a longer time horizon, our conclusion is the same. AbbVie generated $4.40 of adjusted earnings per share in the first half of fiscal 2019. The company distributed $2.14 of common share dividends during the same time period, for a dividend payout ratio of 49% in the full fiscal year. Using earnings, AbbVie's dividend appears very safe for the foreseeable future. AbbVie's dividend safety relative to free cash flow. Many analysts believe that comparing a company's dividend payments to its free cash flow is a better method for assessing dividend safety. Accordingly, we will now compare AbbVie's current dividend payment to its free cash flow. AbbVie generated $2.5 billion of cash flow from operating activities in the second quarter of fiscal 2019 and spent $128 million on capital expenditures during the same time period for free cash flow of approximately $2.4 billion. The company distributed $1.6 billion of common share dividends during the same time period for a free cash flow dividend payout ratio of 67%. Looking out over a longer time horizon, the company's payout ratio is slightly lower. AbbVie generated $5.5 billion of cash flow from operating activities in the first half of fiscal 2019 and spent $235 million on capital expenditures for free cash flow of approximately $5.3 billion. The company distributed $3.2 billion of common share dividends during the same time period for a free cash flow dividend payout ratio of 60%. Using free cash flow, our conclusion for AbbVie's dividend safety is the same as when we used earnings. The company's dividend is currently well covered by free cash flow, and we see no risk of a dividend cut in the near future. AbbVie's dividend safety relative to recession performance. Companies do not cut their dividends in the good times. Instead, dividends are reduced when companies experience financial difficulties. Accordingly, this section will analyze AbbVie's current debt safety in the context of the company's historical recession performance. Unfortunately, AbbVie was not a standalone entity during the last recession, so it is unclear how the company would have performed during the 2007 to 2009 time period. It stands to reason that AbbVie would hold up fairly well in the next recession because healthcare is a necessity. Consumers will seek out treatment for illnesses regardless of the economic conditions. Because of this, we have little concerns about the company's ability to pay rising dividends during future economic downturns. AbbVie's dividend safety relative to its current debt load. The last angle that we will use to assess AbbVie's current dividend safety is by looking at the company's current debt level, which is a cause of concern for many investors. More specifically, we will see how much the company's weighted average interest would have to increase before its free cash flow would no longer cover its dividend payment. At the end of the second quarter of fiscal 2019, AbbVie had $37.1 billion of total debt outstanding. The company generated $358 million in interest expense in the most recent quarter for a weighted average interest rate of 3.9%. The following image shows how changes to AbbVie's weighted average interest rate would impact the company's dividend safety as measured by free cash flow. As you can see, AbbVie's weighted average interest rate would need to rise above the 7.9% level before its dividend would no longer be covered by free cash flow. Although this is slightly lower than we would prefer, we have little concerns about the impact of the company's debt on AbbVie's dividend safety moving forward. Looking out over a longer time horizon, the dividend appears much safer. AbbVie generated $745 million in interest expense over the first half of fiscal 2019 for a weighted average interest rate of 4%. The following image shows how changes to AbbVie's weighted average interest rate would impact the company's dividend safety as measured by free cash flow. As you can see, AbbVie's weighted average interest rate would need to rise above the 15.3% level before its dividend would no longer be covered by free cash flow. Because of this, we have little concerns about the impact of the company's debt on AbbVie's dividend safety moving forward. In conclusion, thank you for watching today's video, which performed a deep dive on AbbVie's current dividend safety. We invite you to subscribe to this channel and like this video, which will help more people discover Sure Dividend's investor education efforts. If you're interested in learning more about our systematic approach to dividend growth investing, visit our website, suredividend.com.